Hello and welcome to the Business Standard Banking Show. R. Subramaniakumar took charge of RBL Bank in June last year. The private sector bank was under RBI spotlight during that time. Since then, Mr. Subramaniakumar steadied the ship with gross and net non-performing assets hitting an 11-quarter low in the July-September quarter. Share prices of the bank jumped nearly three times since he took charge. Mr. Subramania Kumar is here with us today to share his journey in the last 16 months and also talk about the bank's growth plans. Mr. Subramania Kumar, welcome to the show. You have headed public sector banks in the past. How different it is to head a private bank?
Manojit, as well as to the viewers, the first thing I want to say that the banking is common, whether it is a private, a public, or semi-public, whichever the way you want to call it, because it is a regulated entity. So you fall under the ambit of the guidelines of the regulator, and it is common across. What differentiate is that the business strategy, the business model, right? The business model is driven by the passion of the people working in the respective organization. That is the one big differentiator between both the segment of that. Okay, we as a private sector maybe choose to work on certain segment with it deeply, and maybe may not be that deeply in public sector. For example, this bank has positioned itself as the top 5 in credit card and top 5 in microfinance. All other areas it is a touch and go. So that was the strategy. And the second important factor which you have to appreciate and understand between both of them is that they have certain flexibility of taking decisions, and especially within the board driven. So I'll just put it clearly: the board strategically board driven and efficiently executed with the management. This is how this sector works. That is a big differentiator. And another important factor is that the professional engagement is little easier with this kind of private sector. And the professional engagement makes a big difference when you want your thought process or converted into the execution process, and then which ultimately gives the results. These are the major
Right.
which came to my mind. Otherwise, efficiency-wise, both are same.
What are the key changes that you introduced after taking charge in June last year?
The first thing what I thought is this bank by default has a depth of knowledge. That means it is not something which is superficial or it is just related to few top layers. It is what I observed is that this bank had the knowledge was much deeper in -3 and -4. So the ability for looking at the leaders within was much higher, was my assessment. That's one of the major decisions which I took. I did not bring the plethora of people from outside, who in turn will be taking their own time for settling the things. So the time available for converting that energy into the business would have been postponed by a couple of quarters ahead. So which I just fast forwarded by utilizing the team within. That was the first decision, change and implementation which I did. The second one was the bank already had around 500 plus branches, which were primarily looking at the liability. So I just changed them. They're no longer a liability, they're assets too. That means the branches have started looking at the assets also as a sales point. So the branch is not a sales point for liability, but it is a sales point for assets also. That was a big change which I brought in, which requires a lot of mind change. The acceptability of the team was fairly fast, and they really understood that when your ability to sell more and your ability to cross-sell improves multifold. So they have realized that, yes, it is the right way of doing it. That was a big change we brought in. The third change was that when I said that the branches can do the assets, we were not having a multiple asset product at all. So the last 6 to 9 months, just brought in multiple products. The products being a housing loan with the 2 variants of primary housing loan and a housing loan with that of your affordable housing loan. Similarly, in the LAP loan, the loan against property, we had a high ticket loan as well as a micro loan. And we introduced a 2-wheeler and used car, gold loan, education loan, BBG, which is a business loan. Like that, around 7 to 8 products were introduced in 6 to 9 months. This demonstrated one thing very clearly: the adaptation to the new products and launching them within the shortest period was one of the big strengths of the bank, which I just leveraged it. Another important thing what I did is the backbone of the entire thing is the technology. The bank had already established a fairly robust technology, which is leveraged for launching all these products. The most important thing of all was that cross-sell. When you have multiple product, the bank was functioning as silos. There was a lot of synergy brought in between the various verticals. The credit card was looking at credit card as an individual product by itself. So I changed the concept from product centric to the customer centric. That was a big jump and big change with all the other initiatives that has been taken. That's the results are in front of you. That in last Q2, all the new products which we launched, which we call it as a secured retail, grew
Right.
by 30% YOY, which
Correct.
is much faster rate, and we are on track and the correct direction as we planned.
Now, coming to the Q2 numbers, RBL Bank used a part of the tax refund in July September for contingency provisions,
Correct.
mainly for the unsecured business, credit card, and microloans.
Correct.
Are there signs of stress in this unsecured portfolio?
See, if you just go back a couple of quarters when I just took over my narration to the industry wars, we are having a high risk, high profitable product. We also said that as we move forward, we will strengthen our balance sheet by providing little extra than normally, which is being considered as a regulatory prescribed provisions. In fact, if you look at it, the current policy of the bank itself is fairly strong. And nicer, when an account becomes NPA, especially in credit card, we provide 70%. In 180 days, we provide 100%. In respect of MFI, we provide around 25% every quarter and becomes 100% provided in 360 days, 365 days. This is the existing one. Then we also said that we will be going forward, we'll be providing little extra provisions. Okay, that is a stated position. Whether it is related to the stress book or non-stress book, that is a stated commentary of the management. And the refund provided us a impetus for doing that quickly. See, otherwise we would have waited for maybe 1 or 2 quarters, because creating a buffer requires some setting aside your around 300 plus crores of rupees,
Right.
which possibly would not have been possible in this present quarter. But this was provided as impetus with that particular refund which has come. The normal temptation for anybody to put it in the pat and show a huge growth, but we never fell for that particular temptation. Going forward, we also said that we will be providing 1% on the incremental growth of microfinance as well as a credit card as a contingent provisions as moving forward. So this is the stated position. This is not because of born out of your stress in the book at all. A small amount of stress was seen in the lower book level. It is a common to everybody. Civil also came out of the report. Nobody can make exception to that. However, we are confident that we will be able to recover in that in Q3 and Q4 also.
Then the credit cost, but credit cost has also increased sequentially to
Yeah.
about 47 bips to from 39 in Q1. What is the reason for this?
This I want you to look at it in two different parts. The first part is we are around 39, which up to 47, hardly 8 bips more increase, which is normal business which has been increasing. When the book grows, there is always a possibility of very few bips it goes up. That is what the normal one. So 39 to 47 is not a big change. Whereas another 43 bips are added, because we have provided 48 crores of additional provision for the credit card, because we made a policy change. Previously, we were making 100% provision on 180th date of the NPA account or the credit card when it falls. Now that we moved it forward to 120 days. That means
Okay.
we wanted to absorb the entire provision 20th day, so that our focus will be stronger in that, because the team which is doing the recovery will be able to do more recovery, because they will be able to see the right of the book on 120th day itself.
Right.
That is the reason which another 43 bips has been added. So you have to see that balance sheet has 47 and 43. 43 is a one time because of this change in the policy. Otherwise, that regular normal Q2 provision is only 47 bips.
Now, net interest margins post the reclassification of charges paid to the business correspondents increased to 5.54%. So the question is, will you be able to hold on to the over 5% margins?
Yes, we have also stated even in Q1, when we had a very, very marginal reduction in our NIM, we also said that we will be able to bring it up. This is only because of the repricing of the deposit which was happening in the book. So the majority of the repricing has already happened as far as our bank is concerned in respect of the existing deposit portfolio.
I see.
So you would have seen even now also our cost went up to 6.14,
I was
around
coming to
that.
the cost of funds part. Yes,
Yes,
please.
yes.
Yeah.
So just to explain the NIM, I wanted to take you to the cost of the funds and NII both. So the cost of the fund, even if it increases by 15 to 20 bips, which 25 bips maximum, which we anticipate because of our the rate of interest which we offer to the depositors is slightly more than that of the peers. And that's we are in that segment. So we can't say that we'll take a different, exuberant position of that. We are very clear about where we are, and we have to offer that differentiated interest in order to survive in that particular space. So given that, do we have an alternative approach for earning that? That is where you have to focus. I'll take you back to the NII of 2 quarters behind. In 22, we had around 6% growth. In 23, we had 10% growth of NII. At the time itself, we said we will be going to the 20s, and we'll keep on improving thereafter. So Q1 we did around 21.6, 22%. Now we have increased it to 22.6%. So NII is growing, and it will be trending towards the 25%, which we'll be achieving in next 3-4, maximum of 3 to 4 quarters. At the same time, you have to see that our OPEX cost, the operating expenses was around 30% in 22, 30% YOY growth was there in 23 also. But in Q1, it dropped to 15%. At the time, we said that we will be hovering around 15%, 20% because new products, new branches are being launched by us. So by increasing that NII to 25%, reducing the OPEX from 30 to 20% is providing me enough cushion for doing an operating cost. So this will be in a position to increase my operating cost. How the NIM is going to come? The NIM, we are having a remixing of our advances. We earlier said our wholesale was 50%, retail was 50%. Then we said that wholesale will come to 30 to 35%, retail will come to 60 to 65%. So the 65 to 70% is what we are planning to. If you look at the numbers we have done in Q2 itself, 42% is our wholesale and 58% is our retail. And in the retail, all the 7 or 8 products which I explained to you, they are giving me an yield in the range of around 14%, which helps us to protect this NIM. So increase in the cost which we give is getting adjusted and providing an extra margin through the new products which we launch. So we are confident of maintaining the NIM in the range of 5 plus. 5.2, now it is 5.44, we'll be able to maintain it. And rather, it will start inching up as we move forward quarter on quarter.
And finally, what kind of credit growth and deposit growth you are expecting for the current financial year?
Yes, we have given our narrations guidance very clearly right in the beginning for 2026. We said that our minimum growth or we will not be less than 20% of YOY growth in advances. And within that advances, we said that we divide the 3 parts. That is, one, the wholesale banking will be more or less flattish. But within the wholesale banking, you'll say commercial bank, which we call it as an SME banking. It's a medium and mid-segment bank. That will grow between 15 to 17%. Last quarter, you would have seen around 17% growth was there, seen that. Now, on the other side of it, the retail. Within retail, we said that entire retail put together will grow by around 30 to 35% the range. And within that, the secured product will be growing faster. So if you see that Q2, my credit card grew by 27% and MFI grew by, it is 7% because of 70% because of that low base. But as it stabilizes with the current number of, 8,000 crores, it will be going around 25%. So the mid segment, which is our secured housing loan, loan against property, 2-wheeler, 4-wheeler, and BBG and all those things, business loan, it will be growing at a higher rate than 30%. Last quarter, we did 30, and it will move up to 35, and we may even do 40% in that particular secured range. So if you look at that, we will not go below 20%. For the last 4, 5, 6 quarters, we have been consistently maintaining our record of 20% growth in advances. In deposits, again, we said that we will grow between 18 to 20%. Now we have achieved around 13% in the last quarter. We are inching towards the exit of 18 to 20% is what we are looking at in deposit. In CASA, we grew by 12%. We are working out to maintain the same pace of growth in the CASA also. And the biggest change what we did, we moved from the bulk to the granular, both the sides of the balance sheet. If you look at it in both assets and liability, we are looking at the granular. The deposits which are less than 2 crores, it is somewhere around 44.5%. They are likely to increase and then go up by 2% in every quarter and reach around.
Retail deposits, that is, below 2 crores.
Exactly.
It's more than 40%.
Yeah,
so,
44%.
So granularity in both deposits and loans is what is we are looking at.
Absolutely.
On that note, Mr. Subramaniakumar, thank you very much for speaking to Business Standard. It was a pleasure talking to you.
Thank you very much. Pleasure is mine. Thanks to you. Bye-bye. Thanks.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue. of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.